not just return on principal. And they're willing to take that lower yield to
settle, though. I mean, can't you find a higher yield somewhere else?
Well, that's exactly what investors, I think, should be doing at this point. In a market where we have deleveraging an economy where deleveraging is occurring, I think it makes sense to buy assets that have good, consistent dividend yields, as we were talking about, but also buying corporate fixed income that'll give you an opportunity for yield with interest rate levels likely to remain low and actually give you some capital appreciation. That's why investments like PIMCO Total Return, for example, are up the way they are right now, not because of the yield, but because investors are still wanting that certainty in fixed income.
But the bond investors today are destined to be disappointed. If rates start rising, they're going to be looking at their monthly statements and seeing declines in value, and then they're going to say to themselves, this is not what we invested in bonds for.
Well, it all depends, right? It depends on what the maturity is. If you think interest rates are going to slope up very, very quickly, then bonds are a problematic investment. If, however, you believe the Fed is going to keep rates low for, say, a 12-month period of time, and they give that indication, and we're talking about deflation, you're talking about a situation now where the yield differential will likely make up any short-term capital loss if you keep maturity short-term.
The dynamic is changing, isn't it?
Absolutely.
In terms of being fearful of a bubble in the bond market and therefore capital losses, the situation is changing.
Exactly, but I would rather be an equity buyer today at these valuations with profits rising, not falling, dividends increasing. I think over
what happens when earnings die down? What happens then? Where's our positive catalyst coming from?
Well, again, the economy is still expanding. It's not contracting, although the rate of growth is coming down. The catalyst is going to be the disappearance.
Thank you very much. Hank and Michael Yoshikami.
Closing Bell continues now with Amanda Drury.
It is 4 p.m. on Wall Street. Do you know where your money is? Well, welcome to the Closing Bell. I'm Mandy Drury. I'm sitting in for Maria Bartiromo today, and we've been watching a really big rally today on Wall Street. Great day to start off August. We're going to have more on that in just a minute, but first, let's go out to Steve Leisman of the Breaking News Desk. What do you have for us, Steve?
Mandy, thanks very much. In comments being delivered now at the Stern School of Business at New York University, Treasury Secretary Tim Geithner is offering his most extensive comments yet on the development of new international banking standards. He offers 5 standards that he would like to see. One is that banks will be required to hold more capital than before the crisis. Indeed, he's suggesting that the level right now is the level that banks should maintain. He says capital should be primarily common equity. That might be some sort of a dispute with some of our European partners who prefer things other than common equity being allowed into Tier 1 capital. He says banks should hold more capital against riskier assets. Bigger firms should hold relatively more capital. And finally, the new capital requirements should be supplemented by liquidity standards, as well as an extensive speech. Mandy, we just got it. We talked about earlier today what he said. Seems something of an olive branch to banks when it comes to the writing of regulations. But now he's talking about the next step in this process, which is the writing of the international capital standards, and his most extensive ones to date. Mandy?
Okay, thank you very much for the breaking news, Steve Leisman. Here is what we're following at the close. August picking up where the red-hot July left off. Stocks soaring on Wall Street today. The Dow, Nasdaq and the S&P 500 all now positive for the year. Now, part of the reason for the broad-based rally is that the benchmark S&P 500 rallied above its 200-day moving average of 1114. Also, strong economic data giving investors more reason for optimism. The manufacturing sector expanded for the 12th consecutive month, and construction spending unexpectedly increased. And the energy sector also a big driving factor. Oil prices surging 3% to close over $81 a barrel, the highest level since early May. Well, here is how the Dow finished on Wall Street today, up by nearly 2%, sitting at 10,674. So not exactly what you would call the highs of the day, but not too far off. But the Nasdaq up by 1.8%, up by 40 points, and the S&P 500 finishing as 1125, sitting to the upside by 2.2%. Let's get more on all of this. We have Mary Thompson. She's our eye on the floor of the New York Stock Exchange. Mary, a really big day on the street. What do you see from people you've been talking to is behind this optimism?
Well, there's a number of reasons today, Mandy. You know, we only finished 18 points off the highs of the day. The markets took off at the open on the heels of that stronger than expected economic data and basically never looked back. Again, the Dow up 208 points today. It was a broad-based rally. As Mandy mentioned, we had energy, one of the leading sectors. The weaker dollar also at play in the strength that we saw in material stocks. Financials participated as well, and technology really moved to the upside in today's session too. The S&P closing above a couple of key sectors, not only its 200-day moving average, as Mandy mentioned, but also above 1121. And the reason that's important is because essentially that's a 50% retracement between the highs of 2007 and the lows of 2009. So closing on the cash basis at 1125. Some technicians see that as a positive, though some people would like to see it accompanied by higher volume than we had today of just over 1 billion shares changing hands here at the big boards. Financials were one of the reasons we saw the breakout today, in large part because of good news we received from the European banks. BNP Paribas, which is France's biggest lender, posting a strong profit increase during the second quarter of 31%, and then HSBC saying that its profits in the first half of the year were up strongly as well, in large part, and this is unusual from some of the other banks that we've been hearing, the performance of its investment banking unit was actually better than it was last year, and that's unusual. The rest of the investment banks actually reporting a weaker performance there. So HSBC and some of the other European and U.S. banks participating in today's rally. And take a look at the regional banks here in the U.S. too. On a percentage basis, actually, they had stronger gains than some of the big banks here in the U.S. A couple of other stocks that we watched today, these were outliers. MasterCard and Visa are actually coming up under some pressure on the news. The Discover, Barclays, AT&T, and then T-Mobile, they're all working on a mobile payment system that could compete against their payment processing systems. And then we just want to end with Humana, the latest of the health insurers to report stronger than expected earnings and raising its full-year guidance up sharply in today's banner day. Mandy, back to you.
Okay, Mary, thanks very much for bringing that to us. Indeed, the Nasdaq also showing signs of strength today, with the index along with the S&P 500 now in positive territory for the year. We're back in the black. CNBC's Matt Nesto is at the Nasdaq with a closer look at what is behind today's rally there. Hi, Matt.
Yeah, it's interesting. You know, Mandy, that 10 a.m. data point, the ISM really got things going. If you were smart and really good, you could have left at 10:04 and pretty much taken all the money off the table as we drifted sideways from there. So we definitely liked that data in terms of the short term, but then we didn't really gain a lot of momentum or lose it after that. So on we go. If you take a look at where the Nasdaq is now, as Mandy said, you're positive year to date. You are actually above the 200-day moving average, but importantly and noticeably, the Nasdaq is still trailing below their 727 intraday highs as well as the June 21st high. So it's not a multi-month superlative or high for the tech-heavy Nasdaq. Hello, telcos. You saw some of those big percentage movers here today. NII, Vodafone, and MICC, all very strong in this marketplace today. RIM is going to be the exception to that one. The positive spin for RIM is twofold. One is they're going to be launching a new product, a much touted Generation 6 product, their answer to the iPhone tomorrow. Big event scheduled for New York City. They're trying to create some of the buzz that Steve Jobs is able to do. But you can see that the stock got down to about 56 and managed to rally back a buck, down only about 1% on the session. Some are saying that the situation in the UAE is a very small slice of their business, but others are saying it's not about the UAE. It's about governments overseas wanting to keep an eye on some of, well, the citizens in their countries, and they're thinking, well, bigger markets that are more important to RIM, like China, might be following suit. And then lastly, Baidu, touching an all-time high today, Mandy. Don't say that too often. Back to you.
You do not hear that too often at all. Let's hope we say it even more. Thanks a lot, Matt Nesto. The first trading day in August has been a good one for Wall Street. Equity and bond markets putting up some pretty big gains today, despite warnings from Fed Chairman Ben Bernanke about continued high levels of unemployment. And as we told you earlier, the S&P crossing above some key technical levels, including its 200-day moving average. All that helping to lift stocks today. So the question is how long it's all going to last, and how should you be investing? Here with their take is Jeff Hussey, Chief Investment Officer of Fixed Income with Russell Investments. We're also joined by Rick Bensignor, Chief Market Strategist with Execution Noble. Good to have you both on the show. Jeff,